Welcome back, everyone. My name is Nigel Schroeter. Thank you all for watching. Please don't forget to hit that like button below and subscribe to the channel and share this video out with anyone who may benefit from this video. Also, don't forget to leave comments. I love to make videos based off of my comments, and I love to give you guys the answers to your questions. So today's video is actually based off a comment I got from Exclusive Entertainment, and the question asked was, what would be the ideal amount of time for positive payments? So they were referring to my video where I did the Navy Federal secured loan hack, and I talked about the no credit check Navy Federal pledge loan. Now, in this video, I'm talking about how you can get a secured loan and use the money from the secured loan to pay it back. And essentially, Navy Federal, as you pay a secured loan, will give you your money right back. So you pay minimum interest, but you also get all the benefits of having that trade line open and reporting for all that time for just pennies on the dollar. Now, here is my answer to your question. The ideal amount of time for a secured loan varies for everyone and what your situation is. One thing that you want to think about when you go for a secured loan is you want to think about how long until you apply for credit again are you going to need the secured loan open for, and what is the purpose of that secured loan? So what do I mean? What type of unsecured loan are you planning to apply for later that makes you feel like you need a secured loan now to build your credit? So in the case of, cars and credit cards and things like that, the time span doesn't really matter as long as that secured loan is paid on time. Most card issuers aren't taking that loan into account to negatively impact your limits and things of that nature. However, if you're planning on applying for a larger loan, particularly home loans, occasionally depending on the lender, car loans or personal loans, you may want to take that into account, because if you have that loan still open, the minimum monthly payment is what's going to report to that issuer every single month as what they can use for your debt to income ratio, which will make it extremely hard for you to be able to get approved for certain loans, because it will take out those extra couple $100 or whatever it may be. If you have the $250 loan, that extra $50 will be taken off of what you can get approved for with your mortgage. So you want to take that into consideration. So do we want the loan closed before or after we apply for new credit? If you want it closed before, create a timeline on when you're applying for the new credit and set your loan for that time frame. The other thing that we want to think about, besides the type of loan we're applying for and the time frame we're applying for, is of course the affordability of the loan. So yes, you can borrow money from someone to get the funds for a secured loan, but remember that depending on how much you put up initially is depending on how long Navy Federal will allow you to extend your terms. So you don't want to go to apply for a secured loan and then you don't have the amount of money for the time frame that you want. So that's something that comes in extremely important, just as well as you don't want to go to apply for a secured loan and you don't have a large enough loan to make an impact for the type of credit you're going to apply for. So say you want to apply for a home. You want to be able to show that, you can make $500, to $1,000 payments monthly. So you're going to want a larger lump sum or a larger deposit to put down initially when you're talking about applying for larger loans, so that way you get that reporting to your credit report. So when they pull your report, they can say, oh, well, this person has paid, $600 a month for the past 24 months with no hiccup. Why would it be a problem for us to give them, $800 mortgage or, $1,000 mortgage? If it's not that much more money, or maybe you had two of those loans running concurrently. So, hey, maybe they were paying more than what we'd be asking them to pay. So with this particular loan, like I said, it's very simple. The main things you need to think about is what type of credit you're applying for. What is your timeline on applying for credit? As well as how much funds you have available to you, and is it going to in turn be affordable for you to get the particular secured loan that you want. As always, thank you guys for watching. Thank you guys for tuning in. Please don't forget to like, comment, share, and most importantly, subscribe to my channel so that all these videos can be shared out with others, and you can get this content back over and over and over again, because we get better every single day, and we'll bring you more fresh content every single day. Thank you all for watching. We'll see you guys in the next one.